We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to Cash Flow Pro, your daily real estate investment podcast and YouTube channel. Today, I am here with Peter Schull of Patriot Family Homes. And Peter and I were just talking pre-show, and we were discussing all of the things that he feels comfortable talking about, and real estate syndication was at the very top. So we're going to get some ideas from him, some strategies from him, and how they look at their business and how they look at their investors and how they make their investors' money grow. So Peter, welcome. How are you today?
Yeah, I'm doing well. Thank you. Thank you so much for having us on the show.
Oh, yeah, absolutely. We're glad to have you here and glad you could take the time to be with us. So tell us a little bit about yourself and Patriot Family Homes and what all exactly you all have going on.
Okay, well, yeah, those two stories are intertwined. I actually, oddly enough, 28-year veteran. The CEO that started the company actually used to be a subordinate of mine in the military. So twist of fate there. I'm now working for him instead of him working for me. But I'll tell you what, he's a great American. I'm happy to do so. But he and I actually met when we were serving together in the 75th Range Regiment, and he had told me about this deal. Actually, we were deployed overseas at the time, and he was telling me what he was doing with his home back in Columbus, Georgia. How he was kind of renting that out to some military families. And when he got back stateside, he decided that, hey, this is something that he had to capitalize and take advantage of. And he grew it from 30 homes in the first year, and
Oh,
then
my.
where we are. Yeah. So he's real smart on capital structure. So that probably helped, a little bit, how to leverage properly. And again, he was doing short-term rentals.
Okay.
He had intended to go into long-term,
Yep.
but he kind of stumbled into this short-term market because, again, he was overseas. He planned on coming back. His wife was working for McKinsey, so she went back up to DC to kind of stay closer to work and be with family. So they had that home sitting there, and they decided to do short-term rental. He planned on coming back and occupying it. Worked out perfect, but then he saw the tremendous cash flow and thought, hey, there's something here. So
Awesome.
he partnered with some family members up front. Kind of got this thing going. Found a spouse of another military individual, and she was a veteran as well. She had just gotten out, and she was looking for some work. So they kind of partnered together and grew the company to where we are today, where over 350 doors.
Oh, wow. God. How many markets?
So right now we're in 25 plus markets. We're still growing. So Joe just came out of the military just this last year.
Awesome.
And so we're in 25. The name of the game right now is growth. So we're trying to grow as quickly as we can across the nation.
Sure.
13 different states right now is where we can stake a claim.
Okay.
And I'm trying to add more every day.
Now, obviously, coming from single family residential sales, which is my background, I have a general idea of the due diligence and stuff involved in like a consumer purchase of a single family residence. Now, when you're looking at it are all of those doors short-term rentals?
Yes,
They're all okay.
That's all we do. That's all we do at Patriot.
Now, are they specifically situated close to military bases, or is there a cater?
Some of them, yeah. We started off because that's the market that we knew,
Okay.
But then we have since grown beyond that.
Gotcha, because you knew the clientele and the basic way that families come in to visit and so on and so forth. So yeah, that makes sense. So with that, where I was headed with that question was, again, I'm very familiar with the due diligence from a single family retail sale. When you're doing due diligence for a short-term rental, what is what is the like? What all do you all look for? Are you into doing
Yep.
repairs? Are you into doing
Hmm.
like what am I like maintenance that's done before something breaks and stuff like that? I mean,
Sure. Sure. So, what I would say is there's probably not a whole lot of difference between how you're going to approach and look at the asset and making an evaluation,
okay,
because that's a beauty of what we do. We're backstopped by the very liquid single family home
yep,
is the most liquid real estate out there.
yep,
So there's not a whole lot of difference in that aspect of it. Where it will get different is when we start looking at, from a short term rental perspective,
okay,
what is the demand? So for that, we use different various tools in the markets where we have some density. We can use our own comps,
okay,
and then in new markets, we generally rely on both our own marketing research and then analytic tools like AirDNA.
sure, okay.
Mm.
And from do you all incorporate? I'm assuming bank some type of bank financing on. So do you partner investor funds with bank financing on like each deal, or do you package them up, or how does that look?
Well, yeah, yeah. Just to back up a little bit. So when Joe got started into this, he originally was doing all his own buying and holding, and then doing short-term rentals.
Okay,
He spun off a management company from that,
okay,
and then now he just has what he calls the propcos, his holdings company.
okay,
Inside of his holdings company, now he's working with other investors. So he helps them essentially set up a portfolio of one. They have complete control, but they're really kind of an LP. He'll be the GM
okay,
for day-to-day activities. So, in his own, to answer your question, in his own, he works with various lenders across the United States. He's got some bigger partners that he's been going to and working with for quite a while.
okay,
But as we continue to move across the state, across the country, rather, we're always looking for new partners. Now, with those other holdings companies inside of the umbrella holdings
okay.
company, those corporate structures, really those investors bring with them their own lenders.
Gotcha. Okay. So
Yeah.
so you're so he's okay. So there's a
Hmm.
considerable stack there, I guess, if you will, of
Right.
different or layers of companies that kind of go together that fit with the investors. Okay. So
Hmm.
on the single family, what are single family ownership, short term rentals? What are some of the I guess one thing that I think people always look at or think about is maintenance on the I guess what you would call the personal property side of things.
Right.
Like obviously broken plates at our house don't mean much because we put them in the trash can, but obviously so do you have like crews
Hmm.
that go in and take care of these little things or and
Yeah.
obviously, you said you had that Joe had a management company as well. But what does that look
Hmm.
like?
Yeah, so I'll try to describe. I think really what you're trying to speak to is, hey, what's the overall OpEx involved with a short term versus your long term?
Correct.
Obviously, it's going to be much larger, right?
Yeah.
You've got a lot more risk in terms of the furnishings that you've got inside of it. And it's not just the furniture, like you said. It's all the the housewares, the dishes, the pots, pans, everything,
Hmm.
linens, towels, which is also, I'll just comment on that real quick. Is kind of the barrier to short term, right?
Yeah.
You can look at costs upwards of $15,000 to $25,000, depending on how big the home is
Yep.
for furnishings, especially in this inflationary environment. But I would just probably cut to the chase and say that the cash flows are such that that is put into the equation. So we have one line that we do in our underwriting that has to do with the maintenance costs associated by month. Okay.
Okay.
And so as we're looking at it during our due diligence period, we're taking all of those obvious lessons learned that we've had over through all of the trials and
Yeah.
tribulations, and kind of factored that in as part of the equation to determine whether or not the cash flow is good enough.
Now, one part of the short term rental stuff that has I don't want to say held I don't know if it's held a majority of people back or not, but it's one thing that I actually heard brought up on a podcast or show I was watching a couple weeks ago, and there's some concern over scalability of it to the degree that some of these HOAs and some of these I don't even want to go as far as saying like city councils are going to start putting some pretty squash regulations on this stuff. And again, in the short term, I don't think that that's a massive factor that needs to play in. But when you're purchasing an asset and that's your main, and you're purchasing it and underwriting it based on those
Hmm.
incomes, what
Right.
how does that play into your overall plan?
Yeah, so absolutely, that is a risk, and we've had to face that in some of the markets. The way that we have approached the problem, again, you said scalability, and I think when people think about that, they're usually thinking about the market that they're in. Whether you're, let's say Memphis. Memphis is my market. Well, we're thinking about it the way that we de-risk is we're thinking about how many we put in Memphis, how many we put in
Okay. Okay.
Cincinnati, how many we put. So we de-risk by geographies,
There is by
right? So
saying that they're not all, if they're all going to do it, they're likely not all going to do it at the same time, and we would have time
right, yep,
to move the cards around and make it and shuffle the deck
absolutely,
up
and
a little bit.
and that is one of the great things about government is they tend not to move very
Yep.
fast and they're very deliberate.
Yep.
So there will be a lot of messaging, and there's an opportunity to speak out or potentially work with local governments.
Sure.
To say, hey, look, this is how we approach this, so that there's a win-win.
Yep.
We're a responsible property owner. We don't condone all of the bad parts of the narrative. Obviously, we don't want parties and craziness going on
Yep.
inside of our assets, because obviously that is not in our interest.
Sure.
So, but anyway, yeah, to answer your question, that is absolutely something that we take into consideration. It's probably something I should have mentioned when we're doing our due diligence, is to look at the local
Okay.
regulations, and to see where that's trending. And then also too, in terms of where you're going to buy in, a very densely urban area, obviously, there's probably going to be more risk associated with going in there, vice being, out on the edge of town or more in the country,
Okay.
which actually, a lot of people now, I think everybody saw the latest Airbnb earnings release.
Yeah. Yeah.
Yeah, they crushed it. So I think the trend is a lot of people are out there
Yeah.
looking for experiences, and a lot of those experiences can be associated with the rural and country areas as well. So
Yeah, and I'll tell you
yeah.
my experience. So my wife and I went to southern France back in October, and we had like the most stellar apartment that you could even imagine on the. It had to be the most stellar apartment on the planet, as far as I'm concerned. Beautiful view of the Mediterranean in the small little suburb of Monaco or whatever,
Oh
and
wow,
so
yeah.
and it was like I'm not kidding when I say it was like $48 a night. I mean, it was literally
Oh
it
wow.
was almost like it might as well have been
Yeah.
nothing.
Yeah.
And we went back, so it was so cheap that we went back to and decided to say, hey, we're going to go a little north. So we went into Italy about just within 6 months and got over there, and I bet the price of a comparable Airbnb, of course it wasn't, I say comparable based on amenities and stuff and where it was in Florence, was about 3 times that. And so
Wow.
when they said it was up like what 70 something percent,
70%,
yeah.
yeah, in revenues. Yeah, just absolutely amazing.
So and I think that, and just for example, I tend to think of things when I'm looking for something, or my wife says, hey, I wish this had that. I tend to say, okay,
Right.
well, hey, if one of us is saying something about a commonality like that, that generally means that there's probably other people that are thinking that as well. And this was her response when I said, hey, why don't we just get a hotel in some place we had traveled to in the meantime or whatever. And she said, I would
Right.
much rather get an Airbnb because then we can use the kitchen and we can actually have like a place to stay instead of just.
Laundry, you can do your washing and
Correct.
drying, all that stuff.
Correct. And that was,
Yeah.
and so I tended that's when I started like looking into it, saying, okay, hey, if that's her response and that's what she's thinking, there's a probably a pretty good chance because we're pretty common people, and there's
Right.
probably a pretty good chance that there's a vein that's probably more than the outskirts that want these same types of things.
Oh, absolutely.
Um,
And you're hitting on something too that I think is worth kind of expanding on for your viewers, when you're talking about real estate, one of the beauties of that investment is that you've got control,
Yeah.
right? This isn't something like you're investing in an ETF or a bond, or, some other corporate structure is really calling the
Yep.
shots. When you are investing in your own real estate, you have the ability to pull carpet, put new carpet in, put new appliances in, and then you can
Yep.
charge more, right?
Yep.
I mean, take that times 10 with short-term rentals,
Yep.
right? Because you can control all of those amenities that will be available, things that you would not even think about, like in the
Yep.
home, that people are looking for. And like you said, as thousands and millions of people are combing through these listings and looking for, if you're able to offer those amenities that attract them, then you're going to get, a higher premium for that. So even more so in the short term rental, the ability to react to inflationary pressure is a lot better
Okay.
than it would be with your long term. So that's why we really, really like the short term market.
Yeah.
We have more influence over the ADRs.
Yeah. And especially, I want to go back, and of course, as my listeners are very well aware, I'm pretty close to Fort Campbell military base here in Kentucky, and the Airbnb thing really, Mark Twain always said, well, I say always said, Mark Twain's famous comment about Kentucky was, when I die, I want to die in Kentucky because everything happens 20 years later. And so, with that
Right.
being said, it took it took the Airbnb model a long time to come to our area. And since I heard about it years ago, I was always thinking, it's perfect for a military family that wants, like if somebody's son is in the military and they want to come stay and see the grandkids, they don't necessarily want to stay with the grandkids, but they want to stay close.
Amen.
They can amen. I got an amen on that. Okay.
Amen.
And they can, they can have their own place, and they can, again, it's their own, domain
Space,
for a
right?
while, and they
Right.
could even, and they said, and on the Airbnb report I heard yesterday, by the time the show airs, it's going to, of course, be history. But on the Airbnb report I heard yesterday, they said that Airbnb's most used length of stay is 28 days.
Hmm.
And
Yep.
I was I was a bit taken back by that, and I thought,
Hmm.
because everywhere we've ever
I
gone, we've gone for like a week or
Yeah, I think that is the trend. I think I think that what he was saying is that that is the largest growth area,
okay,
is the 28 days and more, which says a lot. To your point, I mean, most people think of it as, a couple day, maybe a week,
yep,
and that is, our experience right now as we look at what our averages are. It is, generally somewhere around there, but we are seeing more and more inquiries for people who want to stay 2 or 3 months. You think about all of the reasons, and you talked about military families PCSing from one place to another. We're actually working with a company that focuses on that niche market and trying to help PCS. It's
hmm,
called PCS at Ease.
yep,
And so we're working with them to offer up our homes to those military families, because obviously, being a veteran owned and operated company, it's near and dear to our heart.
sure.
And we do have a lot of our homes are near military markets. So there's a I agree. I think that trend is going to continue to grow and grow over time.
The length of stay
So,
you're talking about.
oh
Yeah,
yeah, I think
yeah.
so. The whole work from home, the pandemic has accelerated
Yeah.
all of that.
Well, and I'll throw a term out there. I wasn't going to really reveal this, and we've got a guest coming in a few days, but I'm going to go ahead and speak on it. And this term, I know you've heard it, digital nomad.
Oh yeah,
And
yeah.
so I've got a digital nomad that's actually a friend of mine that I met a few months ago, and he's going to be on the show in a couple of days, and their whole model for life is
Right.
based on basically Airbnb. And one of the things that, so I guess what I'm looking at is property owner is massively benefiting by a 30-day stay. um Renter is massively benefiting from a 30-day stay because they can use the furniture and actually live in it. So everything about the whole model is really, I think, in my opinion, only beginning.
Yeah.
um
Oh yeah, absolutely.
and I know that when it first started, and of course the old adage of staying with a stranger, was people were definitely taken aback by, well, I'm not staying in somebody's house. What do you mean? I want my own,
Sleeping on someone
and
else's bed? No
and
way.
the more that I became myself, again,
Hmm.
I look at my wife and I as the average. So we're, the
Hmm.
more that I became acclimated with the idea of staying in somebody else's house, because I was like, somebody had stayed in that hotel room before. What did it matter? Didn't hurt anything, right?
Right. Right.
Somebody else
Right.
used that fork at that restaurant before. What did it matter?
Right.
Another thing. And so when I started thinking on, okay, there was a movie called European Vacation several years ago, and
Right.
he knocks on. Obviously, it was the wrong person's door or whatever, and they didn't speak the language. Went in and enjoyed the family, the culture, the whole thing, and then left the next day, and they were like, "Who the heck were these people?" And so
Right.
what I'm getting at is that's the kind of stuff that I think people are longing for, is a connection of cultures. And again, I know this is getting deep into what you have to offer from an Airbnb standpoint, but you
Hmm.
have to think about it like that, and think about it like, that's why my wife and I travel to Europe, is for culture. I mean,
Right.
we go to just experience what everyday life is like in different places.
Hmm.
And it's the same scenario with Airbnb. And I think that Airbnb offers that. And I don't want to necessarily regale this just to Airbnb, because there's other
Hmm.
platforms also that I've heard folks use. Do you all use any other platforms?
Yeah, we list across all of
Okay.
those. So we're partners with all of VRBO, HomeAway. Obviously the big one is Airbnb. So
Now, if somebody books on one of the sites, does it?
yep.
it-
Yep, through our we use Guesty booking platform, and through that system, it will go in there and then it will block so that we can't get double
Did you
bookings.
call it, what platform was that, in case there's?
Guest Guesty
Yes.
Guesty booking
Okay.
platform. Yep.
Just in case the listeners out there are looking to get into
Yeah,
the
absolutely.
Airbnb business or
Hmm.
get into the short-term rental business. But the thing, and I'll tell you, back to just a little bit back to the regulations.
Hmm.
Nashville is only an hour away from us as well, and as we talk about so regular. Um, and I remember at one point, several years ago, I say several years, it's probably been 4 or 5 years ago now, they
Hmm.
said something like 90% of the they call them sky cranes that were east
You're
of the
right.
Mississippi were in the city of Nashville. They were in
Oh,
downtown
interesting.
Nashville. It was like 28 or 30 of them, or so. I don't remember how, it was
Right.
some unbelievable
A lot of
figure.
growth.
And they were building these buildings, and one of the things that I think, I don't know how it got overlooked or what led to this, but eventually it led to not even just like city, I don't know if it was city council or if it was the
Hmm.
county or what it was, but they were like, hey, these buildings are being built, and they were specifically built for people to come in and invest and buy 4, 5, $600,000
Right.
unit,
Right.
and for short-term rental. And then all of a sudden the city came in there and they were like, boom, nope, shot.
Yep.
And they were like, this is not going down. And I can only imagine what, obviously the fallout wasn't that great because they're still building. But
Right.
that's the kind of stuff that, man, if like it just, that's what I think holds a lot of people back from saying,
Right.
hey, this is a massively scalable, let's let's go into this and do it. But
Yeah. So there's obvious benefits to the local government to work with people who want to do this,
yeah,
right? There's danger. We get it. Obviously those things get hyper, hits the headlines of the news, and people are, it's sensationalized,
yeah.
right? Hyper
Well, if something works for
sensationalized.
one person, you get
Right.
1,000, 10,000, 100,000 people that say, well, if it worked for them, it's going to work for me. And then all of a
Right.
sudden it's
Right.
duplicating on a scale. But hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show. But
Right.
exactly to your point right there, I want to add to that that I feel like it's all about the taxes. I feel like the
Right.
city
Yeah.
specifically was like, "Hey, we're missing out on these transient room taxes, and we're missing out on whatever."
Exactly, exactly. So, you know, the government is smart, and I will tell you that in Nashville they have since reversed that because we
Okay,
actually are active in Nashville,
awesome,
and
awesome.
we do some management for clients in Nashville. But you know, you could actually use this, and you know, if councils were smart, they would zone it into areas where they want to see more revitalization.
Yep,
Because if you think about it, the taxes would go into that particular neighborhood to help with, you know, the tax, you know, the streets, the you know, the amenities that are offered to neighborhoods.
yep.
And again, you know, developers are more than willing to come in, take advantage of a great buy on a piece of property, put some money into it, and then cash flow it through short-term rentals.
Sure,
It's a great
sure.
proposition, and we've done it numerous times.
I had a cousin. I have a cousin that lives in Washington State, and Washington State, for those that haven't been there, is absolutely beautiful.
Hmm.
And she actually, for their 10th anniversary, her and her husband's 10th anniversary, not long ago, they called me up and said, "Hey, we're coming to Nashville to celebrate our anniversary." And I was like, and used to, it was like, what? If somebody was like,
Yeah,
"We're going
why
to
would you do
Nashville," like,
that?
what are you thinking? But it really is a hotbed
Oh yeah.
of a lot of things right now, and so yeah, that's wonderful to hear that you all are active in that market because
Oh,
it's
absolutely.
it. So when at this point in the business, I want to talk a little more about the business,
Hmm.
you all specific Patriot Family Homes. So at this point in the business, are you looking at, obviously it's not going to be profitable for you to step into a new market for one property, I can't imagine, or not going to be massively profitable unless so.
Hmm.
So what degree of geographical research is going on in order to go in and say, hey, we can buy an affordable amount of homes, or is there a break
Hmm.
even number
Yep.
of homes that you look for?
Yeah, so great question. And what we've settled on is, you know, a minimum number is
Okay.
4 or 5. And again, depending on what, you know,
Sure,
we
sure,
think
sure.
the cash flow on that particular home would be. So, but 4 is where we'll start,
Okay.
and we'll have a certain level of, you know, infrastructure we put in at that point. And then generally when we get to the 10 to 15, we start to put in more infrastructure.
Okay.
So for example, market managers and these sorts of things, right?
Good.
And then as we get to, you know, a higher level, we just continue to add.
Yeah.
Now, the way that we like to go into a market, again, we work with investors, so we like to go into you know, a new market, find a long-term property manager
Okay.
that also has an associated brokerage,
All right.
because then what we can do is we can kind of piggyback on their infrastructure for all the big stuff, like, you know, they've got the HVAC vendors and the plumbers and those sorts of things.
Yep.
We would occupy as a normal tenant, and then, you know, we take care of all the guest facing services and all of that sort of stuff,
Okay.
and then we can gather the data off of the, you know, the short term rentals and see how it performs, and then from that we can decide where we want to, you know, allocate our capital into
Sure,
that
and I
particular
guess
market.
there's
Hmm.
probably always the option of liquidating out if the
Yeah.
worst happened and you got into it and it just didn't perform or didn't something appeared or anyway,
Hmm.
I'm sure that's always
Again, that's the beauty. You've got the hospitality stay, you know, in terms of revenues, but then also you're backstopped by the, you know, very liquid single family
yeah.
homes.
Now, one thing that kind of jumps to my mind when I hear short term rentals, and a lot of the I don't want I tend to be a little bit of a marketer myself,
Hmm.
so I don't want to necessarily like punch marketers in the eye. But one of the big things that I see all over social media, and it's a way I feel like it's kind of a hook,
Hmm.
is people talking about this rental arbitrage where
Right.
basically you go and you're like, hey, Mr. Landlord, I want to rent your apartment. I'll pay you a year up front. Then you go to a local furniture store or whatever and you furnish that apartment and then you rent it out by the night, obviously not allowing for a subleasing clause or something like that in the initial lease. And I think a lot of landlords are getting wise to that, but
Right.
is that a way to? I wondered if that was a way to possibly dip your toe in on a market. And
That is exactly what I was trying to describe. So as we go to find that property manager, that long-term property manager, we ask them to open up their book for any that they believe
would
that
be
the
open
property
to
owners
the
need. Yeah,
idea.
rental arbitrage, right?
Gotcha.
Now, again, I agree with you. There's a certain level of risk that you're taking as a property manager.
Sure, sure,
Um, on the flip side, obviously, we're a strong, growing company with a lot of capital,
sure.
and we will pay our bills on time. We are aligned in terms of making sure that you know the property is taken care of, that the asset is not, we don't, like we said up front, we don't allow or can known any parties that are in the properties.
Yeah.
And the other thing is our reputation. We want to protect our reputation as well. So
Yeah, and what landlord or what owner that's possibly an absentee owner of a home that's there on the long term side of things. If you went in
right,
and you were like, "Hey, we want to rent this apartment," and not most of the time, or we want to rent this house, most of the
right,
time, the long term rental company collects 1 month's rent as a deposit, and then of course first month's rent,
absolutely,
and to
right,
go forward. But if you were really wanting to dip your toe in the market and say, "Hey, this is what we're after, and we're willing to pay
right,
double the deposit," which what's a couple of grand if you were 3 grand, whatever it is, we're willing to pay a double deposit, and we're willing to pay first months of, or we're willing to pay for a year
right,
out front, whatever. And
sure,
then all of a sudden you're kind of in business there on the front end, and you go in, do it, boom, boom, boom. But so I feel like I might have to backtrack there a little bit on it being the hook. I just feel
yeah.
like it's the hook on a lot of marketing.
Yeah, I would agree with you. You need to be careful that you're working with someone that you trust and is
Yeah.
is going to make sure that they're managing that property, because it could
Because
backfire.
yeah, there's so many nuances and there's so many
Hmm.
different things that could happen
Right.
along the way. And again, it's a situation. It's much like anything else. It's a situational
Yeah.
business that your profitability is kind of leveraged off the idea of how easy you can move
Hmm.
around within that space. So,
Sure.
well, listen, and
Yeah.
go ahead.
Yeah, the one thing I did want to add to that is, again, alignment in terms of making sure that the property is taken care of. Again, if you think about it, as you're doing a rental arbitrage deal, you're having that home potentially professionally cleaned
Sure.
four to six times a month,
Yeah.
and then
Yeah.
also to professional lawn care, and folks are going to want to make sure that they're
Yep.
taking good care of that property. So one of the things that you won't have as much in, whether it's your own property or doing rental arbitrage, is a lot of deferred maintenance on
Yeah.
properties. And the last thing I would add to that is, because we're furnishing the home, because whoever it would be that would come in and do this,
Yep.
it's a big upfront cost, as I was saying. And so we like to do durable leases, and that's one of the advantages of coming in. Potentially you negotiate some sort of escalation in your lease,
Yep.
right? And then maybe some sort of negotiation on the deposit because of fair wear and tear, all that sort of stuff.
Yep.
But now you've got potentially a durable lease. We'll go up to 5 years
On
on
something that's
leases.
working. Yeah. Yeah.
Right.
Yeah. Because why not? I mean, why not?
Sure.
If it's working for everybody and the landlord's happy and you're happy, the landlord's
Right.
cash flowing, you're cash flowing, life's good.
Right.
So,
Now, I will also say that is not where we see the big margins.
okay.
Okay, so what we use this as kind of a data collection tool when we go into a new market.
Yeah.
It helps us
Yeah.
get set up
Certainly.
fast, and we make some money off of it. Obviously, we have to, but the big money is when you buy and you hold your own property. So
Well,
really, that allows us, and we generally don't want to do any more than 10 rental arbitrage deals. Say like a city like
yeah.
Memphis, right? 10 to 15 maybe in an area like that,
Okay.
but in smaller, let's say like Abilene, Texas,
Yep.
we probably go somewhere around 5 to 6.
Gotcha. Okay. Well, good. Well, listen, real quick, we're running out of time.
Mhm.
I want you to fill the listeners in. Do you read much?
Oh, I do have a book, 0 to 1, Peter Thiel's book,
Awesome.
that I'm reading right now.
That's what I
I
wanted
think
you to say. I wanted you to go right
yeah,
into what's the best book or a book you're reading now. We generally just like for folks to have some kind of an idea, because again, our listeners a lot of times are
mhm,
in the beginning stages, or they're active investors, and they're always looking
yep,
for different things. And I've had to preface on this show to to say any book except for Rich Dad Poor Dad, because every guest I've got is like, oh, that's the
Right.
best book anyway.
Kiyosaki, he's good. He's that's what he does though, is education.
That's
So, but
exactly right.
I think Peter Thiel's book 0 to 1 is fantastic.
Awesome.
I think that kind of runs the spectrum of all kinds of business practices.
Sure.
Good sage advice in there, and I would highly recommend to your audience to kind of go in and pick that one up and check it out.
Awesome. Now, what is the best trip you've ever taken, or a trip you hope to take in the near future?
Oh, okay. So by far the best trip that I've taken, because I was in the military for a while, and I went to the Air War College,
Okay.
had an opportunity to tour around Central Europe for 2 weeks. So I started out in Slovenia. We went to Vienna, we went to Prague, and we went to Budapest.
Yeah.
So
That's
that was by far.
That's a cultural indulgence.
Yeah, Ljubljana, Slovenia is probably one of the most beautiful places I've ever been.
Wow.
And as soon as I can, I'm gonna get back.
Wonderful, wonderful, wonderful. We're always looking for places in
Yeah.
Europe to go because, and again, I like the just knocking on, basically like the Airbnb style of knocking on somebody's door and going in and
There you go.
So, and how can the listeners reach out to you or Joe? And just for context, Joe Riley is, I think he's the main owner of
CEO.
Patriot Family Homes, and he had a conflict.
He's actually with investors right
Good.
now. Yep.
So how can the listeners reach out to you? And I want to thank you all. A couple of things real quick before we jump off. I want to thank you for your service to our great country, yours and Joe's as well. Mm-hmm. And we also want to thank you for taking the time and to get on here with us and fill our listeners in on what short-term rental stuff. So go ahead with how they can reach out to you all if they want to learn, if they want to jump in, if they want to invest.
Absolutely appreciate it. Again, we deal with investors, both big investors who want to do portfolios. They come to us with upwards of $2 million in equity, able to leverage up, or even just small investors who have maybe $50,000 to $100,000.
Sure.
We also do leases, like I was telling you. We do manage clients. If you've got your own property and you just want to try it out, we can talk to you about that as well. We do have a special place in our heart for veterans and first responders. Sure. So please reach out to us and we'll work as best we can with you. But again, come see us at www.patriotfamilyhomes.com. Feel free to reach out to me personally. My first name, Peter.Schull, Shull, at Patriot Family Homes. Or you can call me if you like, 484-393-2519. And again, I'd like to tell you, thank you for what you're doing for your listeners to help educate and get people into real estate investing. Andrew Carnegie said this is the absolute best, safest, and fastest way to build wealth.
It's definitely the safest, and we've seen that, I think, on a number of different fronts.
Oh, yeah. If you've got money in the equities market right now, you're not very happy, I would imagine.
Peter, thank you, sir. We appreciate your time. Give Joe our best.
Sure.
And if we can do anything to help you all, let us know. Again, thank you so much, and thank you for listening today.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.